Hello everybody. In this video I'm going to be taking a brief look at the different kinds of stocks there are. I'm going to be defining a growth stock, the different types of dividend stocks, an ETF, a value stock, a large and small cap stock, a junk stock, and a penny stock. The first type of stock I'm going to be taking a look at is a growth stock, and a very traditional growth stock is Amazon. Growth stocks do not usually pay a dividend because you do not make income from the dividend that the stock pays. You would make money from the company growing and the company value growing as the stock price goes up. The next type of stock I'm going to be taking a look at is a dividend stock. A dividend stock is a stock that you would make money from on a dividend and is not necessarily going to increase rapidly in the value that the share price is at. So, for example, a stock could pay a dividend quarterly or monthly, and the dividend is a percentage of the amount of money that you currently have in the stock. This Royal Dutch Shell stock is an example of a defensive dividend, and what a defensive dividend is a stock that does not increase or decrease rapidly in response to the overall market, which is why it's called a defensive stock. Here we're taking a look at GameStop, which is a income dividend stock. It currently is paying a crazy dividend of 15% compared to the Royal Shell Company, which had a 6% dividend. And GameStop is paying a crazy 15% dividend right now because they do not foresee increasing in value much in the future, which is why that dividend income is so high right now. Next, we're going to be taking a look at an ETF, or an exchange trade fund. And here on my Stash app is a really great example of what an ETF is. It's basically a conglomerate of a ton of different stocks. And here at the bottom, you can see that Microsoft and Apple are both big shares in this ETF. For a very long time, Apple was said to be the biggest value stock and best value stock around, but Apple is now seen as more of a growth stock, and it pays a dividend. Now Disney is seen as a big value stock, and what a value stock is it's priced below its peers based on the PE ratio, or its price to earnings ratio, yield, and a bunch of other factors as well. Next, we're going to be taking a look at the biggest market cap stock, which is Apple right now at $940 billion. Large market cap stocks are $200 billion or over, or for the really big ones, which are really just under 10 stocks right now, of $500 billion or over. Next, we're going to take a look at some small cap stocks, and small cap stocks range from a market cap of $300 million to $2 billion. And here's just a list of some. These companies and stocks are more risky than all of the other stocks we've looked at so far, and a lot of the time they are not extremely well established. Next, we're going to be taking a look at Chesapeake Energy Corporation, which is what would be called a junk stock, or a stock that trades for less than $5. And these are a lot more risky than small cap companies because they're just getting involved in the stock market, or they've been involved in the stock market and their IPO was passed, but the stock has gone through some problems, and the stock is now trading at less than $5. And Chesapeake Energy Corporation is always highly traded, but they are junk stock because they're traded for less than $5 right now, even though it is a huge company. Lastly, we're going to be taking a look at a penny stock, or a stock that trades for less than $1. And when I think of a penny stock, I usually think of a stock that trades for around 5 cents or less, but they're actually defined as a stock that trades for less than $1. And here's Pier 1 Imports, which actually used to be a decent stock to invest in when it originally hit the market. But in the past several years, it's really tanked, and now it's trading for about 66 cents, which makes it a penny stock. Junk stocks and penny stocks are highly volatile, and they are the most risky by far. But if you really want to blow up your money, then you have to find a good junk stock to invest in. And you have to keep in mind that Apple was once a junk stock and only trading for around $2 back in the 80s. So if you can find a good junk stock and you get good at doing it, then you can make a ton of money, but it's really hard to do. If you found this video useful, comment down below if you have any questions about anything I didn't include in the video, and subscribe for more videos on stocks in the future.